Well, hello, folks out there in YouTube land. Got a big show lined up for you, and let's get right on into it. All right, we're going to pull up the screen, but wait a minute. Don't want one of you humble bulls going crazy. I'm wearing my hat. Sometimes I don't remember it. But anyway, let's pull up the screen here. Yes, Hmbl. We're going to do a little Hmbl update. We're going to ask the question, well, we're actually going to answer the question, why is Hmbl down? And there's some pretty obvious answers to that are macro and micro. So let's get into Hmbl. All right, the market sucks out there. I mean, it is brutal. We talked about this yesterday. I was covering another stock, but I mean, it's terrible. And I don't know that it's going to get a whole lot better. As a matter of fact, it may get worse. There's some reasons for that, and we're going to talk about that. And we're going to talk about the future of OTC stocks, high growth stocks, and maybe even the high tech sector in general. This is, it's getting a little tricky out there. All right, we're going to start out with this. We know about the inflation that's terrible. And I discussed this yesterday, this 4, 5, 6, 7% interest they're talking about. Or inflation they're talking about, it's way higher than that. Anybody that's been to a grocery store, been to a restaurant, rented a car, been anywhere doing anything, buying gas, it's way higher than that, probably double that. We've got this Rona popping around at the new version that's really causing havoc and creating an impossible business environment. And then you've got interest rates, and the Fed is going to have to raise them to try to do something about this inflation. So you've got those three things working, and you've got a lot of fear in the market. And let's take a look here at the market sentiment. Right now, bullish. As of the 19th, it was at 21%, neutral 32%. Look at the bearish, 46%. Okay, it's more than 2-to-1 bearish over bull. And look at the trend. It's gone from more bullish back on the 29th, which that's only 3 weeks ago. Look at the trend. It has absolutely, this bearish has skyrocketed. And that's a major problem because you've got tons of people that are scared to death out there. And a lot of them are running into cash. They're selling out and sitting on the sidelines. So there's going to be a lot of cash sitting out there on the sidelines for sure. And they're not ready to pop back in by any stretch, I don't think. And when people get this nervous with the super high inflation, and understand we don't have this easy money piling in, these trillions of dollars coming in from the government now to help pump everything up. That sugar high that we had the last 24 months, that's dissipating. And now we're getting into the real world. Now, I do think this Rona hopefully will start fading away over the next few weeks, and that should help some. But understand with these higher interest rates, this inflation, and all of this negativity out there, it's not impossible to have a recession, or at least some version of it, and go into a bear market, because the NASDAQ's already in correction mode. It's over 10% down, and it's not impossible that we'd see a bear market. I hate to be the bearer of this bad news, but it is possible, and you need to keep that into consideration with all your investment. You know, I haven't bought a whole lot in the last couple of months because it's just been too negative out there, and this has been a really risky market. And I think that's had a lot to do with Humble struggles as well. And, you know, because the dilution has not been very much in the last few days, and yet the stock's down. Let's take a look at the stock. As you can see, it's down to 24 cents. It was up sitting around 33, 34, and now it's sitting at 23. So it's had a big drop. It's actually down almost 10% today, 9.18. So it's had a big drop, and it's not the only one. There's tons that are down. I mean, almost everything's red. And when we talk about dilution, that's been one of the big issues with Hmbl because they are raising money. Let's look at the outstanding shares. It's 1.108. Well, last time we covered this, which was about 4 days ago, we were at 1.103. So there's only been, 5 million shares sold in the last 4 or 5 days. So we're not talking about a whole lot of dilution to speak of. You know, we were at 912 million back in August. Then January 4th, we were at 1,066,000. And like I said, we've only had 5 million shares sold in the last little bit. And where that's coming from is right here. That's right. It's with the raising of money, and they put this S1 out. And you can see the biggest issue are the warrant shares that are being sold, which is 123 million shares. And most of that, I believe, is forwardly. and they are selling some additional shares to raise money. And then, of course, that's up to 255 million shares. But understand they've sold about 200 of those. So a lot of this dilution's already occurred. And yet the stock has dropped a bunch in the last few days, not because of dilution. Here you can see they're raising $39 million for the company, and realize a lot of that is from the warrants. Now understand the warrants can only be sold, or are up, in my opinion, only going to be sold if the stock is above 20 cents. So when it drops down to that 20 cents, you're not going to see a lot of selling pressure. And we're down real close to it. You know, we had this bottom here, which was just under 22 cents. I think it went down to like 21.7 or 8 at the bottom. And so as you noticed, it popped back up. Well, once it gets down around 20 cents, you know, if you had warrant shares, would you exercise them at that point, sell them? Because you're not going to make any money. That doesn't make any sense. So the vast majority of the dilution that would occur would be the warrants. Now understand that raises money for Hmbl. Hmbl gets 20 cents of whatever they sell that for. So let's say they sold it for 25 cents. Well, Humbl's going to get 80% of that. So that actually puts a lot of money in Humbl's coffers, which they need. You know, they're going to need that for the next year or two, because, you know, this is a company that's not making money. It's not going to make money for a while. And I'm not over expecting in the fourth quarter, because a lot of their revenues are ticket sales from when they bought out Tickery, and now they've got Humbl tickets. And obviously they got several other revenue sources that are coming in over time. The big one being peer-to-peer, with the sending of money seamlessly across borders, which is really the big selling point of Hmbl, using blockchain. But they also have the NFT gallery. They've got the ETXs, which have been successful up to this point. They may struggle a little bit in this environment, because if you notice, Bitcoin and Ethereum and a lot of the cryptocurrencies have been dropping along, which is kind of weird. You would think cryptocurrencies would be a bit of a hedge against inflation, but they're kind of moving the same way. It's almost just like there's so much negativity out there that people are they're worried all the way around. So it's not really working as a hedge. But like I say, I think as this thing closes in on the 20 cents, you're not going to have a whole lot of selling pressure. So the only thing that would bring it past that would obviously just be fear and uncertainty and doubt. And there's tons of that out there. So I know this isn't a very positive video, but it's not me ripping on Hmbl by any stretch. This is, look, I could do this video on 500 stocks right now, and it'd almost be identical, because they're all dealing with the same crap. You know, I'm not going to be shocked if some of these big techs start pulling down. I mean, you already saw what happened with Netflix. They're down 20%. Microsoft, Facebook, even Google. You know, it's my understanding is a lot of their advertising starting to pull back, and that could affect Alphabet. You know, and I can tell you, once the FANGs have been keeping everything up in the NASDAQ. That's why so many things have dropped 50, 60, 70%. And NASDAQ stayed up there because Facebook, Amazon, Netflix, Google, Microsoft have all kept the NASDAQ up nice and high, and everybody think it looks good, but it's not. So if those start pulling down, you know, understand they're going to have a bigger sway on the NASDAQ number than any other stock. They're outweighted. So for me, you know, I'm going to be buying at some point, because here's the thing. When fear gets really, really bad, that's the best time to buy. I'm not to the point of ready to buy yet, but as this thing gets closer to 20 cents, I may very well do some dollar cost averaging with Hmbl, and I would feel fairly comfortable with that, because I don't think there'll be much selling pressure, and we might see a rebound at some point. I don't know when the big rebound is going to happen. It will at some point, because understand, when this thing starts coming back, and it always does, it goes in cycles, the high growth, high risk stocks, they're the first ones to crash. All right. And then when the big tech sector and even real estate or even oil and gas, as those start pulling down, you'll start seeing the high risk stuff. It'll be the first to pop up. Well, OTC stocks and high growth stocks will probably be the first ones to recover. And people will start piling into that at some point, because the discounts are going to be so high. There's a lot of stocks out there that I'm looking at right now that are very interesting. I'm looking at Penn National. It's down to like $40, down from 140. Looking at some other stocks that interest me quite a bit. Palantir is down to like $15. So it's down from 45, I think. So that one's, I'm very interested in that. There's a bunch of OTC stocks that interest me, but I'm not ready to pull the trigger. But maybe I need to see some more fear and I need to see some more doubt. I want to buy, I'm not going to find the bottom. We never do. But the more fearful and people start throwing in the towel, that's when I'm going to start buying. So anyway, hopefully we're getting close to that. With Hmbl, I wouldn't feel uncomfortable in that 20 cent area, 21, 22. But again, will it drop below that? It could. Look, anything could happen right now. So understand that. But Humbl's not down because of anything Humbl's done in the last 5 days. Humbl's down because everything's down. And I can tell you a lot of people are feeling like they want to do this. That's right. People are definitely feeling nervous out there. But don't be like the Cowardly Lion. It's eventually going to get better, but we may not be to the worst of it. But sorry I couldn't have been more positive, but I did want you to kind of know I don't think it's Humbl's fault they're down. I think everything is down. And if you like this content, be sure to hit that like button. Lets me know to continue to cover Hmbl. And if you haven't subscribed, hit that subscribe button. Give the channel a chance. I'm normally a lot more positive than this. So, anyway, I hope you did kind of like the content. I don't expect you to really like it, but you know what I mean. And we'll see you next time on Mr. Frugal Investor.